Good morning, ladies and gentlemen. It was really a long day yesterday. I'm guessing most of you must be feeling tired, but regardless, thank you very much for showing up, joining us this morning in this session, the final session of the 77th IREPAS meeting. There have been a lot of meetings, discussions, and probably negotiations yesterday. So I'm hoping that you have been able to make the most out of this unique gathering. I hope you all had some successful conversations. Yesterday morning we had listened to our speakers. We have got a lot of information, but obviously some questions are still out there unanswered. We still need to discuss on them, and we still need to gather some more information. And in the afternoon, we had the IREPAS committee meetings, and here we are together with the chairman of the IREPAS committees. They will be sharing the findings of their respective committees with us, and then we will be discussing on the market situation. We will be answering questions, and I would like to encourage you to join us to make this session an interactive one. Stop me whenever you like to direct your questions so that we can all benefit from this session. I would like to, obviously they don't need introduction, but I would like to introduce the chairman of the IREPAS committees, Mr. Jens Björkman, representing the Raw Material Suppliers Committee, Mr. Michael Setterdal, representing Traders Committee, and Mr. Murat Cebecioğlu, representing the Producers Committee, and also the chairman of IREPAS. So shall we start with raw materials, Jens?
Great. So I was happy to chair the Raw Material Committee yesterday. We saw the largest turnout of raw material suppliers at this conference. I think 76 registered delegates from 46 different companies, 43 different companies worldwide. So that was fantastic. Just goes to show that this IREPAS meeting is a very important meeting place for raw material suppliers to meet the steel industry. It's fantastic. During the current year, 2017, we've seen a continuation of the 2016 bottoming of the ferrous sector, which we saw in a negative trend since 2011, really. So that's been broken now. And the global growth has added some steam in 2017 from last year. The global steel production has seen continued strength, and one of the major factors this year for the ferrous scrap has been that domestic Chinese consumption has been very good and lowered the exports of steel products from the China. Since the demand for steel in the rest of the world has remained very solid, and that has meant that scrap has seen an uptick in demand. And that's also the reason why we've seen very solid markets for most of this year. The industrial output in many different regions in the world has been good. Solid steel and foundry order books has meant that scrap collectors have had a fairly good market. It seems to be encouraging for the rest of the year, and steel production in the major scrap market, which is Turkey, has seen production levels above 3 million tons for the past 6 months, which last year was never above 2.9 million tons. So the last few months has been very good demand pickup, which is what's necessary for scrap to attractive. With the absence of imports of steel to Europe, the producers have been doing well at the last 9 months, and one of the major impacts this year has also been that, or the last quarter at least, that the dollar lost 10% value, and which has been driving commodities for some time now. The recent build-up of scrap supply due to solid markets for a long time has put pressure on pricing for the short term, and with remaining demand seeming fairly solid, it's at least most likely that the markets will be able to get a hold of the material that's in port stocks. So we'll see how the pricing continues, but at least the demand is good. Domestic pricing for obsolete scraps will likely see some pressure in the coming months, maybe in October at least, after we've seen record numbers in the European markets, such as Germany and others, where pricing has been at the highest points for the year. On the other hand, for prime scrap, there's still some tightness, and the industry has, or prime scrap has decoupled a little bit from obsolete scrap, so we'll likely see a continuation of fairly lofty prices for prime scrap. Oil prices are at 2-year highs at the moment, and so shipping costs have become slightly more expensive as of late, added a lot of freight. So that might also lower the reach for scrap in the near future. So one of the major things this year was, of course, that China started to export scrap from having been a net importer for all of the past, and now becoming a net exporter of scrap, which is a new thing in the market and will likely continue for some time. This happened during the year when induction furnace production was halted, and how China will deal with this is anybody's guess, but it's a fact that we've seen material flow out in a larger way than perhaps expected. And the delegates in the meeting, they witnessed in most markets solid demand, and with stocks of material in not too large and not too small. It seems to be in a fairly balanced levels. So,
thank you very much, Jens. Michael, shall we continue with traders?
Yes, the traders met yesterday. We had Wilhelm Alf and Don Beisel on the panel, and we have a situation where we ask potential traders to send in potential questions, and we try to have a debate about them. And the questions that we received, traders were very concerned about the Sections 232 from the United States. I think the reason for that is that the traders have seen changing trade flows around the world before the Sections 232. More steel is staying closer to home, and so the traders have had to adjust to that type of climate. And if Donald Trump's administration were to initiate a Sections 232, on all steel products coming from outside of NAFTA or including NAFTA. This would have a dramatic effect on future trade flows and might have also on pricing. Coincidentally, yesterday Wilbur Ross made a statement saying that the Sections 232 is delayed until after tax reform. Now, after tax reform in the United States, maybe after some people die in this room of old age. But it's something that is certainly on the mind of the trading community. We talked about Turkish mills being hit the most by losing the USA market eventually. However, I think most of us believe that nothing can really replace the Turkish supply of rebars in the United States except for eventual USA increased consumption, because there's only 2 markets in the world that can put 50,000 tons of rebar in one vessel within 2 months, and that's Turkey and China. So, well done, Murat. People were very interested to hear about Algeria. Algeria, exports of rebars from the EU to Algeria come into Algeria tax-free, and it is the principal outlet of surplus production capacity from Europe on the export market. And historically, Algeria has been consuming about 2 million tons of rebar imports per annum, and this year is an anomaly. It is reduced to around 1 million tons. Recently, the import licenses were issued so that they expect about 1 million tons of rebars to come from primarily Italy and Spain, but also from places like Greece here, who are attending the conference here as well. And we heard from Celsa's presentation yesterday that there is approximately 1 million tons of surplus rebar capacity in Europe pertaining to the consumption. So obviously Algeria fits perfectly in that this year. There was concern raised about Algeria not needing to import steel rebars starting in 2018 or maybe 2019, so further adjustments would be necessary. The price for rebars has been primarily driven by the very good domestic rebar market in Turkey, and as well in Singapore, Hong Kong, and China. So as Jens mentioned, that the price peaked a few months ago, and everyone was very happy. It seemed that Turkey could ship rebars to Hong Kong and compete against China, which is an amazing situation in the fact that China produces 380 million tons of rebars per annum, and Turkey produces a bit less. A bit less, okay. Concerning China, traders obviously have noted that steel prices have gone up dramatically in China during this year, and hot-rolled steel has basically been selling at above 4,000 RMB per metric ton, including 17% VAT. I noticed this week, for the first time since April, it has now gone down below 4,000. So there is an adjustment in the Chinese market, and we can't predict as to which way it will go. There was much concern also issued about China re-entering the billet export market. China produces approximately 400 million tons of long products per annum, and from long products you need to have blooms or billets. So China produces 400 million tons of billets and blooms per annum. So obviously the question, or the answer, is not if the Chinese will export billets again. The question is when. Things always change, and we traders need to be prepared for that. Currently, one of the effects of we hear these presentations yesterday about the percentages of going up and percentages going down, but when you think about China, you can't think about percentages, because, for example, if you read in the reports that the exports of Chinese steel have decreased by 28.2% in the first half of 2017. Well, 28%, what does that mean? Well, it means 16 million tons. But if you read that Celsius rebar production has gone up 1% in Spain, that's not more than a couple of business deals. So the absolute numbers coming out of China are very, very important, and we all have to be vigilant because they produce 50% of all steel. They consume 50% of all iron ore. They produce 50% cement. They produce 50% of the aluminum in the world. And so it's going to continue to be having an effect on the market, and we expect when we meet in Warsaw in 6 months' time that we will still be talking about China and maybe sections 232. And we also talked about graphite electrodes. I think maybe we'll have a broader discussion about that from Murat here.
I believe we'll have these questions later on in the panel.
Definitely, there will be questions on that. Thank you very much, Michael. And shall we continue with the producers?
Sure. Good morning again. We met yesterday as well, like the others. Well, we also talked about Section 232, cost of electrode, China. Of course, this is the main thing today. What's happening in China is affecting the rest of the world. But first of all, I'd like to point out that everyone agrees today that we are in a better shape, much better shape than 2016, thanks to improving demand in the global steel products market and decreasing pressure from China. I hope this pressure will stay the way it is today, as Michael rightly put it. So we have to see what China is going to do. I hope they will not be in the market. And because they were absent for the exports, we were able to sell some products, to ship some material to Far East, like Hong Kong, Singapore, and there were many billets or inquiries from Far East as well. And we also, of course, talked about GCC today. There was a ban on exports in Saudi today that's lifted. They might be exporting again. And there's a new player for exports. It's yet to be seen how it's going to develop in the coming days or months. But the general sentiment for the rest of the year was very positive. The demand and supply balance is okay, it's fair enough. It's helping us to do our business much better. And 232 for the US is a very big market, export market for the producers. Of course, it's a big issue. But as he says, as Wilbur Smith, what was his name, Wilbur Ross, said that they will leave it after the tax reform, and which we don't know when it's going to happen. But they will have to finalize this until January 14th, as far as I know. The report has to be given to Donald Trump, and then he has another 3 months to approve this. That's the latest schedule. And we'll see what's going to happen. And besides that, okay, prices softened a little bit, I think, but it will be offset by the increased prices of electrode. So we don't see the prices going down further. Okay, it might go down, soften a little bit more. I'm sure we will have more questions about electrode, as he said, and I think Murat is going to ask us some questions about it. And we'll discuss it in details in further. That's about it.
Thank you very much.
Thank you.
Let me, before we go on with the questions from the floor and also with my questions, I would like to recap I would like to try to recap what I heard from the chairman of the IREPAS committees. So obviously, as we all know, as Chinese domestic consumption went up recently, exports went down, and it has given all of us a very good opportunity in the market. Likewise, the raw material suppliers. Ferrous scrap has seen an uptick in demand following the changes in China as the exports went down. And that's the main reason, according to the raw material suppliers, to see very solid market situation, solid demand for scrap. Obviously, Turkey, the leading scrap importer in the world, has seen increased production levels of 3 million tons per month during the last months. As Jens mentioned, last year it was not more than 2.6 million tons most of the time. So that's a significant increase this year. I have noted that European producers were also doing very well. But the recent buildup of scrap supply has put pressure on pricing for the short term, according to raw material suppliers. Even though the demand is still very solid, this raw material suppliers expect that most likely the markets will get hold of the material in stock, and the market will continue to be strong. But on the other hand, I noted that domestic pricing for obsolete scrap is likely to see some pressure, at least in the short term, in October. But on the other hand, there is still some tightness on prime scrap, and we are likely to see continuation of higher prices. Obviously, another very important change in the market is that China started to export ferrous scrap following the capacity cuts in induction furnaces, and that's a new situation. Raw material suppliers think that it is likely to continue for some time, but in the longer run, at least for the time being, we don't know how China is going to deal with this situation, as there's export tax of 40%. We need to live and see. Traders, on the other hand, are very concerned about Section 232, as more steel is likely to remain closer to home, which is obviously going to be limiting trading options. But on the other hand, I also noted that Section 232 is delayed until after the tax reform, which tells us that it may never happen, but we'll have to see. Traders think whatever happens, I mean, if something drastic happens with Section 232, there's no way to replace the Turkish rebar exports to the US, the quantity exported by the Turkish mills to the US, except the possibility of a significant supply increase by US domestic mills. It can be by capacity utilization increase or whatever, but there's no other option, according to traders. Algeria is another topic that traders mentioned. It is a very important market, even though the import licenses have limited the export quantity there. 1 million ton export possibility with the issuance of the import licenses will be the answer to the excess production in Europe, excess production capacity in Europe. Excuse me, particularly for the Italian mills. Obviously, traders think another important reason for the prices increases in the market is very good domestic rebar demand in markets like Turkey, Singapore, Hong Kong, and China, of course. The increase in Chinese domestic market demand have given other suppliers, mainly to Turkish mills, the opportunity to ship to Southeast Asian market. But it is very important to follow the softening of Chinese domestic market, which may constitute a risk for the future. Also, it needs to be seen and closely monitored if China is going to be re-entering the billet market, which may be a potential risk for the entire market situation. The Traders Committee Chairman, Michael Setterdal, mentioned rightfully that the absolute numbers related to Chinese production, exports, whatever is important, but not the percentages. So we all need to follow those absolute numbers rather than those percentage increases or decreases. And obviously we're going to be discussing the graphite electrodes situation all together in a short while. On the producer side, we understand producers are in much better shape than 2016, thanks to improving demand and decreasing pressure from China. Good news is the export ban in Saudi Arabia is lifted, and there's going to be another player in the market. We have already discussed about I have already mentioned about Section 232 when talking about traders' findings. Producers expect the situation to be finalized soon, but we'll have to see. The chairman mentioned that the results should be presented to the president by January, right? January 14th, and then President Trump will have 90 days afterwards, but we'll still have to see what's going to happen. That's a big question mark. And on the cost side, one final note that I have here, even though the scrap price is down, producers mentioned that the cost decrease is already offset by the increase on graphite electrode prices, so they don't expect they don't see any change in their cost structure. So once again, thank you very much, gentlemen, and I will continue with the questions that we have gathered for the chairman of the IREPAS committees, but before then, if you have any questions at this point, let's start with yours rather than mine. Any questions at this point? Nothing. Okay. So our first question is for the panel, for all three chairmen. Although major industries in general seem to be antagonistic regarding the reality of climate change and any regulations aimed at curbing its disastrous effects, the construction industry in particular stands to benefit from the massive rebuilding efforts that will be necessary following intense storms like those that have hit the Caribbean and Gulf of Mexico region recently. Do you foresee construction firms, steel mills, and others along the steel supply chain making any adjustments to accommodate this future demand? That's an interesting question.
It is an interesting question.
Would you like to start commenting?
Yeah, why not? Well, it's an interesting question. It's kind of hard to answer, but I will try my best. We keep seeing these disastrous storms, earthquakes, whatever, more and more in these days, all around the world, not in specific to one region. So I think that would be a good idea, mills adjusting themselves according to, by foreseeing what's going to happening in these regions. Not mainly storms, because storms are hitting mostly in Caribbean and Gulf of Mexico, but mainly to the houses, destroying the houses made out of wood, not from steel, as far as I know. So in earthquakes, on the other hand, is a big, of course, it's very bad to talk about it, but unfortunately that's happening. Destroys many houses and they need to be rebuilt again, and for that you need steel. For construction firms and steel mills, I think they might act accordingly to adjust themselves, but I think it's mainly of an issue of government regulation. So they need to put some rules to when you rebuild or to adjust themselves to this. There will be a demand in the future, of course, because they need to be rebuilt, but I really don't know what else to say about this. Maybe my colleague says.
I think it's time to do a plug for steel frame housing. Steel frame housing was something that was very much talked about in the 1980s and early 1990s as a way to build houses quicker and to avoid the problem of weak houses in the earthquake areas and so forth. And it kind of disappeared. But I think that this is going to be a real driver in the Caribbean for steel frame housing, where people will be buying lightweight beams and welding them together because one of the main problems in hurricanes is that the roofs lift off because it's like a big umbrella, and everyone who knows what happens to an umbrella under the awnings, they just lift off. And I think that the houses, many houses in Florida, southern Florida, they have shorter overhang in order to create less uplift when the hurricanes come. And the housing will have to be adjusted in the Caribbean. And hopefully there won't be a Category 5 a hurricane coming every other year. But this thing about climate change is something I think is that industry has to embrace by first supporting renewable energy and being able to take advantage of shifts in the demand from the consumer.
Thank you.
Pardon?
As an opportunity for flat or for long?
No, it's primarily opportunity for the steel industry, but specifically for long products, because small H sections and joists and angles and so forth. I mean, we're not talking about traditional 60 by 60 by quarter-inch angle. We're talking about lightweight material that is called the steel frame housing. And it protects the inhabitants much better than the present softwood lumber type of building and the thin corrugated sheet roofs and things like that.
Thank you. Any comments, Jens? No. Okay. Moving on to the second question. This one is for the raw material suppliers, but still on climate change possibly and the hurricane. Will Hurricane Harvey's impact be limited to the local scrap market, namely the Gulf Coast, or is it likely to affect export shipments as well? Do you think it will particularly impact prime grade scrap since supply of such scrap is already limited?
Well, we discussed it yesterday, and we got some first-hand examples, and we understood that there's, after the hurricane, about 500,000 cars or so that were destroyed during the hurricane, and which will need to be finding their way to shredder machines in the area, and likely also some other forms of obsolete scraps. So likely the estimate was that it will take some 18 months or so to digest in the U.S. market for these types of materials in this area, because there's still a lot of difficulty to get the material out. So about the next year or 1.5 years should be, but it's likely not gonna impact the amount of scrap by too much.
You don't expect?
Yeah.
Scrap cars are not going to be scrapped. The flooded cars are not going to be scrapped that fast.
No.
Probably will be sold throughout the country. And it will take you a few years before people realize that
Okay. So I see no questions from the floor yet. Moving on to the next question. This one is for traders, still on Harvey. Although it has been reported that damages are not as big as predicted, do you think Hurricane Harvey will have longer-term impacts such as higher steel prices in the coming months?
I think that the main effect will be that the lead times for certain steel products that will be used in renovations or rehabilitation or shoring up shorelines, sheet piling, those kind of products will have long lead times, and if people are in a rush, they will obviously be willing to pay higher prices to get material from companies that have that. And for example, lots of the shore piling industry in the United States is a rental business. They buy from the producers of the sheet piling, SDI and Nucor, and then they put it in their stock, and then they rent it out for a period of 6 months or 3 months. So I assume that the rents for these sheet pilings are going to go like this.
Thank you. Moving on to the next one. This one is producers, for producers this time. At the IREPAS meeting in Budapest earlier this year, there were some ripples of anticipation as US President Trump had not so long before made a proposal for $1 trillion spending on infrastructure. There have not been any tangible developments at all in relation to such spending yet. Was it all just so much hot air, or do you expect any positive developments on this front anytime soon? Yesterday I directed a question to Frank. He didn't expect much, but...
Yes, but any question relating to Mr. Trump is difficult to answer in these days. So there was hope in the beginning, but I don't know what happens. Of course, it's a serious spending, $1 trillion spending on infrastructure. We all know that infrastructures need to be renewed, and they are very old. I really don't know what's going on. He had made promises in the beginning, but he was not able to realize most of it until now. But eventually he will have to do this, and this has to be done. I cannot say much because it's also local politics probably, and it has to go through certain channels and needs to be approved. And this has to be taken seriously. It's $1 trillion of spending. This would bring job to many, many exporters to US, and also the local mills in the US, of course. It brings together many other jobs as well, and on top of what's going to be spent as a steel. But it's yet to be seen in the future. I believe in 2018 they will start doing so. Well, I'm hoping so.
We all hope.
So, but I mean, there is no definite answer to this. I'm just, trying my best to give my opinion. That's all. Maybe some other guys can answer better than I do.
I think that the infrastructure spending has started locally in the United States. Anyone who's been to greater New York City in the past year, there's a tremendous activity of rebuilding bridges.
They renewed one bridge, I think, Trogsnek, what was it, in New York?
And then Frank Berggren said yesterday, is he here today? That he mentioned that the highest prices for rebars were on the southwest coast of the United States and the Northeast. So I think the Northeast has been picking up its infrastructure spending.
Yeah.
I think Don has something.
Well, for the infrastructure projects to really take effect, first they have to plan it, and then they have to design it, then they have to get the right of way, and then they have to build it. So these things take such a long time that it's not possible in one administration to do it from A to Z. Keep in mind, when Obama came, he also had some infrastructure projects to stimulate the economy. He was there for 8 years, and when he left, there were still a lot of projects didn't even have shovel in. So it takes time. So this $1 trillion that they're talking about, probably 2018 is too soon. I would say maybe 2020 if it all goes through. But it's all good news because that means there are money to be spent, but it's going to take a long time.
But still, it doesn't hurt to hope. Any other comments on this one? No. Okay, moving on to the next question. This is once again for the panel and anybody else to comment on. Considering the recent anti-dumping and countervailing duty cases involving imports of rebar and wire rod into the US, with some final and preliminary margins reaching prohibitive levels, do you see this as an opportunity for alternative sources to gain a foothold in the US import market? If so, which supplier countries are in the most promising position? We're not talking about replacing Turkey, just a foothold.
Theoretically.
Well, okay, I will try to answer this question because I think I can. Considering the recent developments, anti-dumping cases, countervailing duties, I'm talking as a Turkish producer at the moment, we already have close to 9%, which is in today's value adds about $50 on top of our costs. Of course, we have to put this, when we are selling anything to US, we have to include this into our prices. And as I'm talking with my colleagues and my friends here, all during this meeting, it's really putting big pressure on the prices when they compete locally with the local produced materials there. And of course, there would be some opportunity for other countries to export to US because they don't have this $50 extra cost. And as far as I know, for example, Megasa is doing this today, and they have sold some material, good quantity, not bad. And who knows, maybe as the bans lifted in Saudi, they might get a chance to export something to US. And everybody's going to look for this because it's a big market. It's a very important market. It was on top of the top 3 export markets of Turkey. There's big potential. Everybody's going to get a piece of it. That's for sure, and people will try to find a way to get in, as Megasa did and some Italians did, and there are some other countries also doing it. Today, Peru is also selling. There were sales from Japan, but I don't think they will have it anymore after these duties. But everybody is going to find a way to get a piece of this market, that's for sure.
But for new players, there might be some investment requirements like peace council.
For new players, okay, it's a totally different ball game. But we will not leave it. As Turks, we are going to find a way. We are very flexible of finding ways of doing this.
We all know that.
And thanks to our colleagues as well. I mean, we are always in.
Alternative sources highly depends on changes that can happen in the marketplace in those source origins.
Correct.
Because, for example, if for some reason the rebar price in Russia drops by $100 a ton, then it's a new source.
Sure.
But today it's not a source because the rebar prices in
That's
Russia
all.
are higher than they are in the United States. So obviously people are not going to ship from Russia to United States.
And also this, we are always talking about this protectionism in every IREPAS meeting, and it's really widening. And you are hearing every new anti-dumping case every month, almost every other day in these days, and that will affect, that will change, it's changing the export and import markets. One is going up, the other one is coming in. We were not able to sell to Far East earlier because of China. Now we can sell. We had anti-dumping case from Canada. Now, okay, we got the margins which are enabling Turks to export again to Canada. I mean, it keeps changing all the time.
No, I would agree with that. All the time somebody's, touching and changing the market balance.
Exactly.
Any other comments on this one from the floor? Or any other questions? Still nothing. Moving on to the next one. This is for the raw material suppliers, Jens. This summer, the price difference between scrap cargoes ex-US East Coast and ex-US West Coast has widened significantly. Furthermore, the price of scrap in Turkey became much higher than prices in the scrap import markets in the rest of the world. We have seen that Turkey has imported scrap from the US West Coast and even from Australia for the first time ever. What do you think has caused this situation? Why have Turkish mills paid much higher than other importers worldwide? And how have the other import markets reacted to this situation?
Well, a lot of questions. But one of the first things that happened, I guess, where the difference between the US West Coast and US East Coast pricing is due to the Chinese exports of scrap to the nearby markets, which made US West Coast have to go elsewhere. The freight differential for the East Coast to West Coast is not, I mean, it's significant, but it's not huge. And the recent demand or the recent production increases in Turkey, which we were also talking about before, of 15%, 20% in some cases. We've seen solid production rates in Turkey for some time now, and where they've added at least 400,000 tons per month production, which means that there's a lot larger scrap need than they needed last year. So the reasoning behind shipping material further, also when oil prices were not so fantastically high, meant that freight rates were competitive, and at the same time demand was very strong. And likely also domestic markets were performing fairly well in Europe and elsewhere. So those combinations meant that it was feasible to send material longer distances. It happens, but not so often. And yeah, we'll see how it goes in the future, but it does happen, and the right mix of reasons behind it were all there.
Thank you. Obviously, we see, as we have just discussed, the market changes pretty often, and the Chinese exports have been quite a significant factor earlier this year, I guess. No comments, no questions. Moving on to the next one. This is for the producers. For quite some time now, Turkish rebar exporters have been experiencing difficulties in concluding sales to what were their main target markets, namely the US, the UAE, and Egypt. What are the prospects of Turkish exporters regaining their positions in these markets in the coming months? What other markets in particular stand out as alternative destinations for Turkish rebar exports? And finally, how do you see Turkish exporters' prospects in Southeast Asia and the Far East?
Okay, we touched this subject
Already.
in the previous panel questions, but I would again. UAE, US, different reasons. UAE today, Emirates is dominating the market. Today they are not exporting as they used to, and the capacity today is definitely enough for the local consumption. Turkey used to export to UAE about 100 to 120,000 tons a month. During the course of this year, in the total 9 months, we did about 100,000 tons. So, I mean, that market we forget about that market at the moment. Not only UAE, in GCC in general, we also used to export to Saudi and the neighboring countries as well. But today, I don't see any opportunity in the near future. So, but they become exporters, as we mentioned earlier. The ban has been lifted in Saudi, so they can export to wherever the country they like to export to. For US, we've been exporting to US, but lately, because of this Section 232, there was a hesitance of exporting, and for the traders or for the buyers importing the material. But as we talked about it, it will be hopefully finalized in the coming few months or so. And I mean, the deadline is January the 14th. The report has to be given to Mr. Trump, and he has 3 months to approve it. So whenever he does it. So the latest date would be like January, February, March, April the 14th would be the latest date for this. That's as far as I know. This is what it is. Egypt, another anti-dumping case is going on there. So that's the reason. But other markets are coming. As China are not exporting, we were able to sell to Hong Kong, Singapore. There were many inquiries, especially billet inquiries from Indonesia, Malaysia, from all that area. There was an anti-dumping case going on in Canada, but now we are able to sell again, and Turkey sold some about 90,000 tons recently. And there are talks going on for further sales. Well, that's about it. I mean, this is, of course,
Thank you very much.
Balance is always changing.
Okay. Any questions, any comments? Yes, can we have the microphone, please? Here, on the front row, please. Do you have also? Okay.
Excuse me?
Let me get back to you. Please go ahead.
With the shortage of electrode today, with the shortage of electrode today, do you think China will restart the induction furnaces and stop exporting the scrap? Do you think they will back to the induction furnaces? This is the question.
I doubt very much China will start producing again with induction furnaces, because the government is very keen on environmental issues. So I don't see it that way.
What's going to happen is already happening. Is my microphone on? Hello?
Yeah, okay.
What's happening is that, for example, in China, there are very modern induction furnaces that can produce 2 to 2.5 million tons of steel per year. And the government has shut off the electricity to these people, but they have the infrastructure there. They have the casters, the ladle furnaces in some of them, and they have rolling mills. And what they're doing is they're taking out the induction furnace and ordering an electric arc furnace and put it in place. And that will bring back some of the capacity. But for the people who are not, have been shut down, the induction furnaces, they're gone forever. And people are already prospecting to put shopping malls or whatever high-rise buildings where these buildings are.
Smaller induction furnaces had problems with quality of material.
Yeah.
And the government didn't get their VATs, and they have environmental issues. So those three in combination, we will mean that they won't be opening small induction furnaces again.
And for those of you who were here at the presentations by the gentleman from CISA, he confirmed that China really didn't know how much steel was made from induction furnaces when they gave the order. And so it means that this part of the industry was a black industry and that there was no VAT paid on incoming scrap, but there was no VAT paid on outgoing product. Yeah. And this is what surprised even the people in Beijing. So of course it surprises us because we know less than they
And
do.
it's also showing in the statistics of steel production this year.
Yes, yeah.
Can I ask? Okay. Now, what's the impact? There will be any impacts on raw material when, for example, the iron ore of exporting scrap from China? It will affect the iron ore prices and the decrease in the prices today of iron ore reaching, I think, 63, 60, whatever. Is it linked because of? Is it because one of the reasons behind it scrap prices?
I think
Scrap exporting.
No, I think the scrap the scrap pricing in China domestic market is very low because of low use of scrap. So it needs to go out some of it needs to be exported. So the pricing in the domestic market is very low. So that also gives furnaces an opportunity to invest in the EAFs. But I think the recent iron ore price drop may be because they are closing some production for the winter months, at least 20 million or 25 million tons in the Shangtang region, I think, to cope with smog. So the possibility to sell iron ore into China this winter will be less than last year.
Thank you.
Actually, as Jens mentioned, it's so low that they were able to, the scrap price is so low that they were able to export even with 40% export duty. So it's incredibly low in the domestic market. I think iron ore iron ore demand is also down because there is some production cuts ahead, and probably they have reduced their demand for imports, and the inventories were so high at the ports. The inventories are also going down slowly. So they are probably using from the inventories at the ports and not demanding a lot more iron ore. Hadia, you had a question,
yes,
I guess?
My question is related to export of scrap out of China. Will this export be competitors with the European suppliers? Was this a factor that made a scrap market or trade lately quiet? I mean, it was lately 3 weeks, no activities on the scrap market. Was this an effect, but because China started to export scrap, or?
No, I think that was the scrap.
Or there is no correlation because you said everything is fine and suddenly we don't see any trade in scrap. So
yeah.
Was this a factor because they started to export China cheap scrap or what?
Chinese scrap started to be exported earlier than 3 weeks ago. So it was started to export during the first half of this year. Almost like in the second quarter, I think, was the largest amount of scrap exports out of China. So effects in the market we've seen during the mid-term of this year. For example, when the West Coast shipped scrap to Turkey, that was a reason for, that was because of Chinese exports took that position. But the recent 3 weeks, I would say, is due to a buildup of scrap supply, mainly in the United States, when expectations for the domestic market were a little bit higher, and the alternatives were few. So that's the reasoning for the current price fluctuations, if you say so. Demand seems to be fairly stable, but the supply has outgrown the demand.
So China will not continue or will continue, you think,
well,
to
it's a
export?
multi-million-dollar question, but for short term and the foreseeable future, it's a fact that China is exporting scrap to the nearby
Nearby, but it's not coming
areas.
to this part of the world yet.
Yes, why don't you say it's something to do with the price? If it's 350, maybe they'll export. If it's 260, they won't export.
Already?
It's difficult to say.
Sorry?
My personal belief is
Tell me.
that there is certain quantities of scrap
So
being
it's
exported
competitive.
from China because people who are holding scrap, they are receiving it every day at a very low price, and they don't have any induction furnaces to sell it to. So they have big piles of scrap, and they have no place to do anything, and so they like to get rid of it.
Thank you. Moving on to the next one then. Thanks for your comments and questions. If I can. This is for traders, Michael. In August, the US dollar lost value for the 6th consecutive month, its longest losing streak in a decade. Can we expect to see a weak dollar for the foreseeable future? What have been the most noteworthy effects of the dollar's relative weakness on the steel trade?
It's an easy answer.
Normally, and nothing is normal, is that when the dollar is weak, commodities are strong. Because most, I think the number is like 80% of our worldwide commodity trade is traded in dollars. And it means that people who are importing the commodity in a non-dollar economy can afford to pay it more without affecting their margin in the domestic market. So that is what the normal effect is, but there is no normality to anything for the time being, and there's nobody who can predict what the prices will be in 3 months' time. It's just not possible. We are going to have volatility in commodity prices, and we're going to have volatility in the US dollar, maybe. But the Trump administration, I'll come back to Mr. Donald again, is that almost all presidents up until Donald Trump had an official strong dollar policy. Is that correct, Ira, James? And that now the administration seems to be changing tact and has an unofficial weak dollar policy.
Correct.
Yeah. Can you enlighten us on more of this?
Well, I mean, Donald Trump and the administration thought they were going to revive manufacturing, which has pretty much disappeared in the U.S., as everybody kind of knows. I mean, at least we're way down from where we were in the 1970s and 80s, and he used his populism to preach a bit about having more manufacturing, more jobs, yada, 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 but they came to the quick conclusion that a strong dollar does not help manufacturing for exports. So now they want a weaker dollar, and they come out and they say they want a weaker dollar. But it seems at the moment that everybody, for 6 months ago, most of the hedges were all on a euro short position. So everybody was short the euro. And now everybody's short the dollar. So these things take time, but we're going to see a snapback. And I think he's come to the they kind of know that the dollar's not going to get weaker as much as they want it to.
Thank you, James. Just one more comment here from Don.
One thing to add on this one is typically the strength of the dollar or any currency has a lot to do with the interest rates in that country. So in the US, the interest rates are low, The expectation was the Fed to increase it, but they have not. So the administration does not really wish that the interest rates go up, but we're expecting a change in the Fed, so that policy might change, and you may see the dollar going up again. And really, when you look at the dollar being strong, you're looking at the euro-dollar parity, and what really happened was the euro went high because of the situation in Europe. So it's really not the dollar, but it's the euro, because when you look at the dollar against the other currencies, it was not as effective as the other currencies.
As a matter of fact, our next question is on, once again, euro versus US dollars. Let me move on to that one for the producers. Doing business has become more difficult for European exporters after the significant weakening of US dollar against the euro this year. If the euro maintains its strength, how can European exporters compete in the international markets? Will increasing arrivals of imports in Europe result in more trade measures?
Well, half of this question has already been answered, I think, through Don and James and Michael here. This, again, the volatility will be there. I mean, the US is trying to strengthen the value of dollar. As we have talked, they're trying to increase the interest rate. Hopefully they will do it in December and continue in 2018. And this happens, of course, if this happens, the dollar will gain its strength against euro. So this will help also for them to do more business, most probably. At the moment, until today, they were not able to be in the international markets. I'm talking about European producers. There were some problems in North Africa, as we talked about it, with licenses and everything. Even Italians were trying to sell some material to Turkey. And they did so, some, I don't know, rusted and left around material. They sold it to Turkey. Yes, James?
No, I was going to say, to add to what you're saying, part of the reason that the euro has appreciated, besides the short, long positions, this and that, was Macron's victory, right? Everybody was expecting Merkel to win, okay? But basically in my mind, what I see that doing is that seals the fate of Brussels. It seals the fate of Europe, because everybody looks at it as a status quo. Everything will be fine, when structurally we know it's not. So when I don't want to be controversial, but it's at least we'll make it a little more fun in this bloody room, right? Everybody's tired from last night.
You want to wake everyone up, huh? So
Right. No, so I think it was actually the worst thing for the euro longer term. So we may see in the next year, 2 years, I mean, it's hard for us to look past the next cargo, let's say, in our business, but I think we'll see within 2 years the euro break par with the dollar.
Okay, at the moment, what we are doing is just...
let's have the alternative view here. My personal opinion is that the euro has gained strength because the European economic activity growth has surprised everybody. It's surprised the people in Brussels, the people in Strasbourg, and the people in Frankfurt. That's the central bank and the parliament and the government. The UK economy has been very resilient, and there's a positive feeling in Europe. And for example, if you look at the flat product market and you go back to February, hot rolled coil domestically in Europe was at 500 euro plus minus this and that. And then the mill started talking about increasing the price 30 euro. And every customer said it's impossible, economic activity is not strong, it's forecasting to go down. And now we have a price of 560 euros for hot rolled coil produced domestically in Europe. And that's based on the improved economic activity and the demand. And the lead times are going longer on flat products. And on long products, I think Jose sounded quite satisfied yesterday, if I may interpret him.
I would say to that, Michael, that higher prices
makes everyone happy.
Exactly.
Yes.
Okay, but that has nothing to do with the structural problems with the euro. Those are not going to go away. Currencies can take a longer time than anybody can imagine. We can all go broke trying to trade currencies, but the structural problems of the euro, a stiff wind could blow over the banking system. Anybody disagree with that?
Okay, we have.
Anything can happen,
Take
James.
them-
Anything
take
can
this
happen.
mic away,
Anything
quick.
can happen. But this is an endless
Absolutely.
argument,
So
and I don't think we'll find the solution to this
You have,
problem.
you have
through
already heard both sides. The counter is open. We start to accept bets.
bets. You got 5 minutes.
Yeah.
So that's
Okay.
about it. Okay.
Let's move on. Thank you very much for your contribution, James and Don. Actually, we have already discussed this next question some minutes ago on Chinese steel scrap exports. Anything to add, or let's move on? This one is for traders, Michael. Looking at the key issue of China's presence in or absence from the export markets, we have seen Chinese suppliers focusing on their home market this year amid strong domestic consumption, and this situation has been to the general satisfaction of steel suppliers elsewhere worldwide, providing them with some badly needed breathing space. Do you think Chinese suppliers will remain absent from the international markets in the foreseeable future, also weighing up the overall backdrop of environmental protection measures, recent announcements of winter season production restrictions, and the halting of work on infrastructure projects in Beijing? Little additions to what we discussed earlier.
We've touched almost all of those questions, but after reading them, another twist on it is that if you go back 3 years, the major steel producers in China were issuing corporate bonds, and they were accepting to pay 4 and 8% interest rate, and they were making 5 RMB profit per ton on everything they sold, and they couldn't pay the interest payments, so they had to roll them over, and we couldn't figure out in the Western world, why are they selling steel at 5 RMB profit? Well, they needed to generate cash all the time. And today, I've been told that certain of the best integrated steel mills in China are making $150 a ton profit. So obviously they're able to service their debt, and they're feeling quite good. So the situation in China is affected by, and I sincerely believe this, that Beijing is serious about the environment, and for the mills who are not environmentally cleaning themselves up are in big trouble in the future, because the average Mr. Chen and Ms. Lu in China, they believe that having clean air is more important than having a job. And this is a big shift that's occurred in China during the past 5 years. And that's what we see here this winter season again. And anyone who has been in Tangshan during the winter, we all know that, I mean, you can really feel the bad air entering your lungs when you step out of the hotel room. So these are things that, the gentleman from CISA yesterday mentioned that China is serious about structuring the steel industry.
Of course, he also mentioned the employment issues, but
yes, yeah.
he always said it will take time. Thank you. No, oh, sorry. Please add.
Yeah, thank you for everyone. My name is Adil from Sabiq Hadid. I think regarding this question, at least to my understanding and belief, it's a very important issue in general, which is affecting the whole industry worldwide. And thanks for your description. But in general, to my opinion, I think it's very difficult to predict, or answer. I have an opinion, just I want to share it with you.
Please.
And please, I want your reflection, even if it's the opposite. Steel industry, at least from what we saw during the last, at least to my understanding and my experience, 21 years, it is vary and cycles, and the factors affecting the peaks and bottoms, it is different from time to time, maybe, and from country to country, growth, economy, stability, infrastructure requirements. But at least just to make it very simple and very focused to our current situation. we have different factors affecting the good consumption during the last at least 1.5 year improvement in steel profits. But the bad opinion that I have I think it is China. The moment they started adjusting their requirements negatively after the 2 digits growth during the last decade, everyone around the world, regardless of the different other factors, affected negatively. And the moment before 2-3 years, they start the government to reform their industry by a way or another, environmentally, or to my belief, for the efficiency of their production. It is more than, but politically they have to say environment. The whole world of a steel industry start breathe little bit. They start having positive results gradually until the good time that we are seeing today. Okay, what will happen during the coming very short period, 2-3 months to the rest of the year, or midterm or long term? Whatever the factors that we are measuring, and I think it's logically we have to consider the currency changes and values, the economic strength in Far East of the countries that you mentioned, the movements in Turkey or some other parts of the world. I will not discuss the details of micro weight of different factors, but it is China. Nobody can predict what they will do. The moment they decided that they will return back to the whole world with 10 to 20 additional millions, like what you said when you said the 20% or the 1% of Spain, I think this is real. Then the whole picture will be changed.
Sure.
The only main reason for positive or negative, unfortunately, it is China movements. No
Nobody can
other
argue
reason.
with that.
No oil, no growth, no strength, no. It is only China decisions. Thanks. I'm sorry.
Thank you. I guess nobody can argue with that.
No, no. It's a good opinion.
Yeah. Thank you very much.
Good
okay.
or bad, all signs shows China.
Yes.
Yeah.
Okay, moving on to the next question. This one is producers and on the hot topic of graphite electrodes. We all know that one of the major issues facing the global steel market at the current moment is the graphite electrode shortage. Russia's Federal Anti-Monopoly Service is considering reducing the anti-dumping duty on electrode imports given the global electrode shortage, which is foreseen to continue into 2018. How do you view the situation regarding the electrode shortage from producers' point of view, obviously? Do you expect to see further price increases? What do you think will be the consequences on EAF steelmaking globally, on long product prices, and which are the possible solutions to this issue? Mr. Ray touched the subject yesterday, but let's hear.
Yes, we've been talking about this throughout this conference since we came here on Sunday. And it's a fact that graphite electrode costs are increasing, and it has increased like tenfold. Up to now, it was about $3,000-4,000. Today, people are talking about $40,000. And when you come to think of, you need 1.5 kilograms approximately in order to produce 1 metric tons of steel. Today, 1.5 multiplied by 40,000, like $60 the cost of electrode to produce 1 metric tons of steel. What do? You just put it on top of your cost, of course, then the price will jack up. And at the moment, of course, this is not the cost, but this is what's going to happen if it goes on like that. I think the main reason of electrodes cost increasing and the price of electrode is increasing is that there was about 30% cut in China of manufacturing electrodes, which is about 300,000 tons as far as I know, in the second half of 2016. So this is one of a big reason. And again, China. Okay, so all the signs are showing China. You are quite right. And this is not a short-term problem as far as I'm concerned, and it will take some time, probably throughout the whole 2018, maybe first half of 2019. There's a shortage of material, and unfortunately they are just taking advantage of this problem and increasing the prices. And this is what it is. I mean, the prices will increase, and it will affect the cost of the material at the end.
Any risk of production?
Okay, there will be, of course, there might be some problems with some mills during the course of 2018 if this prolongs. That might happen. Yes, sure. Sure. Without electrode, you cannot produce this material. What are you going to do?
We heard that there's many manufacturers of electrodes. They are increasing their capacities, maybe in the midterm.
Yeah, definitely. There will be a solution.
There
but
will be
in
a
the short
solution.
run-
I don't know so much of the details. I don't. So maybe Michael
If I
can.
may just summarize what I heard, because I didn't know very much about this before, and Sundeep will say something after to correct me, is that in the world today, electric arc furnaces are generally producing more than they did during the average of the last 3 years.
Mm-hmm.
And so it's being discussed that the graphite electrode manufacturers are going to put the EF furnaces on allocation based on what they did before. And in order to conserve electrode consumption, steel mills like Izdash, I presume, will be extending tap-to-tap times in order to conserve the amount of electrode consumption. And that means that they are going to reduce production automatically, because when you extend tap-to-tap times, that's what happens.
Of course, the mills will try to adjust itself.
So if I were
a
a EFA producer here, I would be telling my customers that, hey, listen, 2018, we have to produce less steel. So you don't have to convince them on the price. You just tell them, hey, we're going to produce less steel. If you want some, let us know what price you want to pay.
Another thing is that the graphite electrode is produced, you need needle coke to produce graphite electrode. And as far as I know, needle coke also used in lithium batteries. So there are more and more cars are coming up with these kind of batteries, and they need to use this needle coke. And needle coke is not a coke that you can dig out from the ground. It's a derivative of oil. It has to be produced in a way. So that's another point that I just wanted to make.
Sandeep Rao has a question over here, or a statement or a correction.
No, just to follow up on the needle coke. We talked to a number of manufacturers in India about the situation, and one of them told us very plainly, I'm running at maybe around 50% capacity because I don't have raw material. I don't have needle coke. So I don't think there's a capacity problem in the electrode producers. There's a problem in them getting raw material. And how that situation will correct itself also remains to be seen, because the needle coke suppliers are basically like a monopoly. There's only 5 or 6 guys in the world, and they can play this however they want.
Yeah. And
so
as the lithium operated cars are in demand, and there will be more in the future, I think the demand for needle coke will be much higher than what it is today.
So how it plays out is really, I don't think, you can talk to the electrode suppliers, because they really are also in the same position. They don't know what's going to happen. So, someone at some point, we have to see what is going to happen with the needle coke and the refineries, and whether they can actually increase the production of needle coke, which we don't know. I mean, maybe there's someone from petrochemical industry we can invite next time to tell us about this.
Thank you, Sandeep. Let's hear the scrap side of this story from Jens Björkman. It's very likely that the electrode shortage problem will continue into the first half of 2018. Possibly there will be a significant lack of electrode supply, and this will direct EAF mills to buy billet instead of scrap, maybe. Turkey, the world's largest importer of scrap and the 6th largest importer of electrodes, will be seriously affected by this problem, as most of its production comes from EAF mills. To what degree do you think global scrap prices will be affected if Turkey reduces its scrap imports?
Well, I mean, if they reduce their production, they will also reduce their need for electrodes. So it might not have the effect, but of course, Turkey is a very important market, and this year has added production, as we've said, and that, of course, is also drawing into the into the mix that electrodes are tight, and with induction furnace closures in China also. So yeah, it's going to be an interesting year to see how this affects the EAF-based markets, because it can, of course, have a major effect if there's difficulty in obtaining electrodes above the amounts that they had before.
Yep.
Could be, yeah.
But you know, to offset electric arc furnace billets with blast furnace billets is a natural idea, but the problem is that blast furnaces, they produce steel by going from blast furnace to converter to a ladle furnace.
Yeah.
So they also use graphite electrodes.
A lot less.
A lot less, obviously, and there's a smaller size, and there's people aren't talking about big shortages there, but still, it's a bottleneck.
Absolutely. Thank you. Moving on to the next one. Actually, we have already discussed this one as well, so I will skip this one. And once again, China situation, we have also discussed this one. Any thing to add on the risk of Chinese exports or a demand crisis in Chinese domestic market, and do you see any possibility in the short term? No further comments. Moving on to the next question, if I can. Yes. Oops.
One too many.
Okay. This is for producers. Turkey reduced its import duty on rebar from 30% to 10% in response to requests from its construction industry after the rises seen in domestic rebar prices. It's already obvious that this reduction has not resulted in lower prices in the market. Given that Turkey produces more rebar than it consumes, do you believe the import duty reduction will really lead buyers to seek import rebar sources? This is actually an easy question to answer.
Well, today I don't see any reason why anyone from Turkey should import anything with this 10% duty. With these prices all around, I don't think it's possible, and Turkey is very flexible to find new ways of dealing with this issue. At the moment, I don't see any risk, and I don't also see it for the long term as well.
Okay, thank you. We have got two more questions here, but one of them is on section 232, which we have already discussed in detail, so I will not talk about that. But one last question for raw material suppliers, Jens. What's the current situation in the financing of trading of scrap and or other raw materials?
Yeah, so financing in the trade of scrap, like we have seen for the past few years, we saw the trade in the Black Sea come down considerably because banks were not accepting that kind of financing, and that's essentially gone now because it's still not promoted by banks. So that kind of financing is not in the picture anymore. But when it comes to because of control measures and KYC issues for banks, know your customer issues, and that kind of relations, that trade finance banks in Europe were not extending those kinds of credits anymore. So that's the reasoning behind it, as I understand it. When it comes to credit to the industry, it seems that we've seen a turnaround and sort of a pickup in availability of credit lines, and trade finance seems to be promoting itself a little bit better in the last period than it was a few years ago when it looked a little bit less interesting. So yeah, it seems that credit finance is in better shape at the moment.
Yeah.
Thank you.
I agree.
Any other questions or comments from the floor? No? So with this, we have come to the end of this session. Once again, I'd like to thank you for your contributions. And I do hope that you have all made the best out of this unique gathering here in Athens. I would like to thank the chairman of the IREPAS committees, Mr. Jens Björkman, Mr. Michael Setterdal, and Mr. Murat Cebecioğlu, for sharing their opinions and expertise with us. I also would like to thank our distinguished speakers who have shared their expertise and knowledge with us during the course of this conference. Finally, I would like to extend our gratitude and thanks to our sponsors, Liberty House Group, Bashtu Metallurgy, Silanor Steel Industry, Hellenic Halivouria, Rusula, Belgian Scrap Terminals, Euroband, and Matios Refractories. Our next meeting is going to be, as I have mentioned yesterday, I cannot show you the slide, but it's going to be in Warsaw, as you know, on May 6 to 8 next year. And we all hope to be able to see each other by then. Thank you very much. Bye-bye.